Hampden Bank is a local community bank dedicated to helping local families get their start, and that usually means buying their first home. Bob Michel takes that job rather personally. He's the Senior Vice President in charge of mortgages and lending here at Hampden Bank, and he's ready and willing to help. We sat down with Bob recently to ask him some of those most frequently asked questions by those looking to finance their first home. We're here with Bob Michel, Senior Vice President of Hampden Bank in charge of mortgage lending. Thanks, Bob, for being here.
Well, thank you.
So let's start with the basics. How do I figure out how much home I can really afford?
Well, there's two things you can do. One, you can first start with the industry standards. The industry standards have traditionally said that a consumer should use no more than 28% of their gross monthly income for principal, interest, taxes, and insurance. And when you combine all your other monthly debts, that should not exceed 36%. I like to tell people they should really determine what they can afford. Don't let someone in a suit, such as me, tell you what you can afford. You should look at your own monthly budget. You should take a look at what you're paying for housing expenses now, and is that taxing your budget or not? A great way to do it is to go on our website, hampdenbank.com. We've got a wide variety of calculators there, and one of them is simply what would this much cost me at this rate for this many years. And you can back into what you're comfortable with individually. But those are traditional industry standards. They're not carved in stone. Some people qualify for more, some people qualify for less.
Are taxes and insurance figured into my mortgage payment?
There's a lot of costs that come with the ownership of a home that if you were a renter before, you didn't incur before. Maintenance, something happens to the furnace, so you've got to fix it yourself. You don't have a landlord to call. So we try to tell people to be realistic, work out a household budget, and kind of back into the numbers you're comfortable with. And then we can help you figure how much that'll allow you to buy, depending on your down payment, and how much you can afford to borrow.
So let's discuss the types of mortgages that are available to the first-time home buyer. What's out there? Well,
if you're a first-time home buyer, first of all, there's mortgages that have some benefits that are provided by agencies such as Mass Housing. We do a lot of work with Mass Housing because they're able to offer quite often to a first-time home buyer a low down payment and some interest rates that are below market. However, if a borrower has enough funds to fit into a traditional non-subsidized, shall we call it, loan, there's certainly traditional fixed rate financing. There's a variety of adjustable rate mortgages. And right now adjustable rates have kind of a bad rap in the marketplace, but for someone who knows that they're only going to be in a home for a certain period of time, that adjustable rate mortgage may make sense because typically rates are lower than fixed rates. Maybe not in this environment, but in general they are. And you can structure one of those ARM products, they're called, so that it's fixed for the period of time that you expect to be in that property before maybe you move on to your next home.
What would be the questions to ask before getting into an ARM?
Well, again, I think first you start with how long you think you're going to be in your property. When we have traditional pricing, and by traditional pricing I mean when we're in a market where fixed rate pricing is higher than adjustable rate pricing, in my mind, to pay for a 30-year loan when you're only going to be there 5 years, you're overpaying. So you've got to start with that. Then I think you want to know how frequently the loan is going to be reviewed for rate adjustments. For instance, here at Hampden, we have loans that adjust every 3 years, every 5 years, every 7 years, and not until the first 10 years. So you can structure fairly long periods of fixed payment. You should also look and know what the margin is. So the margin's going to be how much above the index the loan rate can move at any adjustment. So typically the index is a third-party index that the bank doesn't control. And it would be, for instance, 3% over that rate, and that would be the maximum. You should know how much the loan at any review period can increase, either up or down, because that is something I don't think the average consumer understands, that adjustable rates have provisions for rates to go higher. They also have provisions for rates to go lower when rates are down. And when that happens, the borrower benefits from those lower rates at no cost. They don't have to go through a refinancing. They don't have to pay for another appraisal, for closing attorneys and those types of things. So there can be benefits depending on the environment we're in, as far as rates go, and their personal situation.
What is an interest-only loan, and why would I have one of those?
Interest only is just what it says. It's a loan where you're paying interest only, which means you're not paying down the principal. Those were quite popular in the go-go years, we'll call them, when subprime loans were available, and there were a lot of exotic types of mortgage loans that the average person was taking. In my mind, they don't make much sense. One of the reasons you buy a piece of property is to create equity. And while we all enjoy the creation of equity when the values of our homes go up, the only thing we can really depend on is creating equity by paying down the amount that we've borrowed. So as you pay down the principal of that loan, you're creating equity and creating some wealth for you and your family. So to me, again, interest-only loans don't make sense for the average consumer. For the rare individual who, say, is in a highly commissioned job and receives a large lump sum once a year and is disciplined enough to pay a portion of principal at that once-a-year bonus payout, those loans may make sense for someone like that. But again, it would be a very small segment of the population, I think.
And what is a negative amortization loan, and why would I want that?
We frankly don't offer negative AM loans, they're called. The marketplace did offer them again during those subprime years. I don't know if you could get one of those loans today. And frankly, they did not make sense in our minds, which is why we never offered them here at Hampden Bank for anyone. Frankly, it allowed people to get into a home purchase that they frankly couldn't afford. Because if you can't afford to pay all of the interest every month and you're not paying down on principal, the balance you actually owe that lender is increasing on a monthly basis instead of decreasing.
If I have a large sum of money to put down on my home, is that always a good idea?
I would never advise someone to put all of the money they have down on a home if they did need that large down payment to purchase it, because you should have some reserves. Again, there are surprises that come once you become a homeowner that bring added costs besides the monthly payment that we've spoken about previously. It may make sense to put more money down than required when you want to lower the payment to fit some of your budget needs. Maybe you're coming to a point in time where you know you're going to have added expenses such as education for your children, those types of things. So that would help you absorb some of those expenses. If you want to take the loan out for a shorter period of time, so you've got a target amount that you want to pay every month, but say you want to make that loan pay off in 15 years. So a larger down payment may still keep the monthly payment within your budget, but allow you to have a shorter period of time. So again, I think it's an individual situation that's got to be analyzed, and it's something we do with people every day.
Thanks, Bob Michel, for being here today. He's the Senior Vice President at Hampden Bank for Mortgage Lending. Thank you very much. We've learned a lot today.
Well, thank you, and I hope it's helpful to the people out there.
Now, if you have a question for Hampden Bank's financial wizards about financing your first home or any other questions about financing, we'd love to hear from you. Just drop us an email at westernmasslivingtv@gmail.com and we'll try to get it on the air. The answers to those frequently asked audience questions will be later in the show.